Welcome to Business Talk here on Business Tech with me, Michael Avery. A fresh take on business and life during lockdown and how some of the country's leading companies and business leaders are adapting to operating under the cloud of this pandemic. I think executives everywhere are thinking through the contours of the next normal, how they're going to lead their people and their organizations through the next 12 months as the world races to find a vaccine. And what are the various scenarios that could possibly unfold as we look back on what has been a very tough year and we look forward over 2021. Well, my next guest is Director of Capital Markets at the Johannesburg Stock Exchange, and at a time when questions have been raised about the alarming global trend of delistings in markets around the world. There have been muted volumes locally on the JSE for the longest time, but also a time when the new CEO has breathed fresh energy into the business. It's a great pleasure to welcome Valdene Reddy, who is Director of Capital Markets. Valdene, welcome to Business Talk. Firstly, on the COVID front, what impact has COVID-19 had on the JSE?
Hi, Michael. Good day. Yeah, so COVID has really been, I've described it as indiscriminate, and really COVID has had different impact across the whole ecosystem, whether you look at listed companies from big or small, whether you look at our suppliers in our value chain, the members in our market, some of the issuers in the market, as well as the clients or the investors on the market, retail or institutional. So it really has had far-reaching consequences, as we've seen globally, and has left us in a little bit of an uncertain phase. You spoke about a new normal, and the one thing that's been debated is what exactly does that mean for different industries. So we felt it in massive breadth and waves at the exchange level. Firstly, I guess in the depth or in the eye of the pandemic, we really saw massive volatility on our market. And then it brought some of the good old merits of South Africa back to the fore. Things like deep liquid markets, high turnovers, good caliber companies where there were safe haven plays to find, the fact that we had multiple dual listed issuers listed. It brought back some of the resilience of South Africa as an emerging market. And we saw that coming in fast and very liquid markets. But that was navigating a very, very uncertain time. We came up, I guess, for a little bit of air, and then that started letting the dust settle off. What does it actually mean? And through that, we had to work with our counterparts, listed companies on the exchange, members on the exchange, to say, how do we support an ecosystem so that we can get through this together? The one thing that really has stood out for me through COVID is because we were all subject to similar conditions, whether it was remote work from home, question marks around viabilities of business, how would our people thrive and survive in this pandemic, that it also brought a unifying factor. And in all of my career in capital markets, I haven't seen as deliberate a move for more collaboration across the industry as has been evident now. So that has been really quite a good takeout for me, is that we've all rolled up our sleeves, all become a lot more practical and pragmatic about the approach, and the approach has become very real. Now we can translate that to good old-fashioned stuff such as that actually translated into a surge and a spike in demand for social impact bonds, and we saw that globally, and the JSE responded with different product as well through launching a sustainable segment. Or we could take it right down to how do we get policy reforms in for change and open up the whole country to say what's deliberate. So for me, that has been probably the key takeaway that has been refreshing or positive for me, is that people have become more deliberate to work together and almost braver in trying change for the collective good of the country, which for me has been really good.
That is a very positive outcome from a very difficult and trying time. I think the access that we now have to each other, into each other's homes and living rooms via video conferencing, right down to the fact that we all realize that the pandemic has affected the poorest of the country disproportionately. Those of us who are lucky enough to still be able to work from home could do that. Many more couldn't. And so it's brought all of those issues to the surface in South Africa. So great to hear that has catalyzed thinking around things like sustainability and impact bonds. You also conducted your first virtual listing during lockdown. Just talk us through that and what some of the challenges the company has faced in the move to a virtual world in recent months and indeed years.
Yeah, so I guess what's been nice is that the wheels keep turning, but because of the impact that COVID has had on all our lives in the current situation, we then had to supplement things like virtual AGMs, virtual listings. So it's really been good to become creative, and it did mean to test the boundaries. So yes, we actually hosted our first virtual listing this year, and then a couple of subsequent listings thereafter. Really, to be honest, the process was quite the same in what the regulatory framework would be for getting a listing come to market. But where we would typically symbolize a listing come to market through a market open, and in South Africa, we have a blowing of the kudu horn or beating of the drums, where other markets ring the bell to signify that we're welcoming a new company or a new product onto our market. This year, we hosted a virtual listing event. And it was actually quite good because it became more inclusive. One, we had a lot more guests that we could invite. And it was also at a time where we were showcasing South Africa and the fact that we were resilient to show that we could still bring product to market, and product that had decent demand. It offered diversification to the market. But the most sincere and humbling part of that was that we still carried out the symbolic event of blowing of the kudu horn and beating of the drums with our security guards that were on site at the building. So for me, it just made us become more inclusive, a lot less serious, and a lot more, embracing of saying what can work and how do we bring it to the fore. The other good milestone that was done was in the form of virtual AGMs. And as you would know, it's really the imperative of the company and a responsibility for you to communicate with your shareholders and to have it accessible and available to all who might want to cast a vote, big or small, in your shareholder, even someone who just has one shareholding. And that was also another move that the market did as a collective, and the JSE also had a product that we brought where we could do virtual AGMs. Again, something that we were even a little bit more progressive than some of the developed worlds, but it's also opened up the door to say, now you can reach a lot more people. You're challenging the mediums. And in that, then actually brings in, well, is there better accessibility that you can bring to people having a voice or owning their responsibility in being an investor or having access to capital markets? So for me, those were good test cases, and you had only the current now. You didn't have to hypothesize these for years ahead to see if it would work. You basically had to do in the environment, and they've been successful. And it also then brings into question, what does the long term, and we spoke new normal, what does the long term or the new normal bring for any traditional mechanism of communication, of working, of engagement, of travel? And I think that there will be opportunity costs to what we've instilled at the moment, but there will also be a lot more diversity in and differentiation in the way we communicate with each other.
And to your point, deepening capital markets by using these new ways to reach a broader section of the market, to bring in new retail investors, for example, and that's really great for the country, great for the JSE, and of course for entrepreneurs and companies who want to come to capital markets to raise capital. Now, to your earlier point, a big part of this has also been changing some of the regulatory environment. Treasury announced reforms in the capital flow management framework in the medium-term budget policy statement recently. What does that actually mean now for the JSE?
Yeah, this has been one that was very close to our heart, and you would have seen as well from our press release that we had worked with the policymakers to drive home 3 areas within capital markets for policy advocacy, and that came through in the exchange control reforms. So the 3 areas that we advocated for was to standardize inward listings so that everything was classified as domestic. Previously, only equities were classified as domestic, and now SARB has embraced that all inward listeds would be classified as domestic, which means instruments like debt or derivatives or ETFs and ETNs would also be classified as domestic. The second area that we advocated was actually non-ZAR listings, and as evidenced, and with very volatile countries, currencies and high demand across the continent and globally, having diversity of non-ZAR listings opens up your competitiveness of South Africa to say we can actually issue product in South Africa that is applicable to a wider universe. And the last was to accept non-ZAR collateral, so hard currency collateral outside of ZAR, which again opens up our market to say it's an easier medium, you have better capital efficiency. So you're absolutely right. There's been this shift from policymakers to try and increase South Africa's competitiveness. And these were exhibited with their moves to adopt some of these exchange control reforms. And there were other metrics as well. There were two others that specifically were tackled for the asset management industry. So it's been great. I have to say, we've had a whole wave of excitement because a lot of these have been in the system for over a decade, and all that has come is they've come to now, as I mentioned earlier, something that's deliberate and tangible, and we're trying it out. There's still a lot of question marks about working through the technical detail. But while the opportunity is ripe to start working as this collective, because there'll be a part for each of us to play, it does then bring the opportunity of new types of listings, new types of clients that would want to trade the market, actually bringing assets that could be managed on shore, and then in turn leads to job creation, tax revenue for the country. So there's a lot of upside. There will be unintended and opportunity costs that we'll have to work through. And like I said on a previous call where I was discussing this, it gives us the opportunity to evolve and edit and adapt some of our products, our offerings, and our services. And I think so far, whoever we've spoken to in the industry, be it some of the asset management, be it some of the investors, be it some of the banks and sell-side firms, they have all been almost ignited with a little bit extra excitement to think creatively, to think of how does it apply to their business. Notwithstanding, there'll be clarity on technical matters that has to come through, but it just gives a breath of fresh air. You know, you mentioned earlier, we've not seen listings in South Africa, and there's a massive concern about the contraction in listed markets globally as well as in South Africa. And this, for me, almost was like this breath of fresh air of thinking of what could be done differently. How does South Africa position a little bit stronger and then open up our doors in terms of, even if it's just cross-continental product, does that give us an opportunity as South Africa to grow across the ecosystem and build up scale in capital markets?
But as you say, plans that have been in the pipeline for over a decade, but finally we are seeing policymakers move. And there has been a lot of movement. I know there's been this pall of gloom over South Africa following the last decade before the new administration took over. And there was a lot to fix. There was a lot to clean in that dirty European stable. But we are starting to see things move, not only in capital markets, we're starting to see things move in infrastructure, in renewable energy, the spectrum auction issue. We would like to have seen it this year, but first quarter next year is the next best prize. We're seeing moves afoot by the MPA to bring people to account and to book. So I think all of this then starts to create a structure around which you can start to build a far more optimistic outlook for the country. That said, we have seen delistings on the JSE, and it's the elephant in the room, people wondering what's going on. Afrox recently, we had the announcement of Anchor as well. And I mean, there are various driving factors and forces here. I think entrepreneurs also see that there's value. And so there's a lot of value to be had to take a small or mid-cap private and they may be listed again in a few years' time. But do you see this as a concern for the bourse and just a reflection of the times?
Yeah, I have to say it is a concern. It's a concern for ourselves, and it's a concern across the market. And it's quite a hard view to balance because it is the top line headline looks quite negative that we have all these markets being all these companies or issuers delisting. Now, globally, the US in particular felt this now probably for the last decade, where you had a shift from public to private markets for a whole host of reasons. Term that investors were looking for a longer term, so they thought that there was more opportunity in an unlisted space, whether it was a high regulatory or high cost framework to being listed, and whatever it is. Now, we've held ourselves to high standards. So South Africa's had a great capital markets for the past 2 decades and increasingly so. Even though we've had the number of delistings, we've actually seen our market cap across the exchange grow. And that speaks to the caliber of the companies that are listed. I guess one area of consideration is a number of the delistings have taken place either as a result of corporate actions or where there was opportunities for M&A, as we saw with, Pepsi taking out a listed company, and that gave opportunity for growth for that entity. But some of them have also resulted in the small and mid-cap space. And this would really be, I think, a collective focus is what would be the right catalyst. One, to channel funding to these companies, and two, to give them a medium such as listings to help them grow. Trade activity across the small and mid caps is also a function of whether they have been successful or not in their listings. And given that we have a very large collective investment scheme market in South Africa, pension fund and asset management industry, things that are typically in an index or very liquid, so your top 40 or your top 60 stocks have been the areas of interest and focus. So as a JSE, we've focused on a couple of things. As I mentioned, it's an area of concern, and so it's an area of deliberate focus for us. The exchange control reforms is one move to say, how do we bring in alternative platforms or mechanisms? Growing on the debt space and growing the product universe, such as the sustainable segment, is again, how do we respond to what would be the product issuance of time and would be relevant? We've had lots of innovations in South Africa, such as the SPACs, the 12Js, a listings framework to try and facilitate that. We are looking to see how we can work more deliberately about bringing in better dual listings and working with other exchanges to see other listings of targeted companies that would want to come to South Africa, because we, as I mentioned, having that deep base of investor flow is an attraction factor to say there is money in South Africa that can be deployed to companies. And then we're working on a couple of road shows to say, how do we target these entities for listings in South Africa? Is it cross geographical regions? Is it a focus into the East? Is it a focus across some of the African countries? And we're quite selective in that. And so there's many areas that we're looking at to try and respond to the current problem. We also address through our COVID relief measures ways to help support the secondary market trade activity of the small and mid caps, and we'll continue to do so to say, how do we showcase these companies so that their relevance becomes heard, and work with the industry to say, how do we try and incentivize trade activity flows and interest into the small and mid caps so that you have a bigger breadth of stocks. Yeah. So I think it's more than just an exchange problem. I think it's an environment, a cyclicality problem as well. And one we have to keep working on, I think, to either bring in listings or to actually try and grow.
Yeah, and use the financial media as well to tell the stories of those small to mid-cap stocks. You tend to have an outsized concentration in the sort of top 100, not really the top 40, the top 100 companies get a lot of free publicity from the financial media. And below that, there's a great universe of stocks. A whole host of issues around research and who's covering them, and they are under covered, but there are ways to be creative about expanding the universe of coverage. And I know I'm certainly keen to do that in my role as a financial journalist. Now, what impact, we've also seen the likes of A2X and other exchanges come to market over the recent years. What impact have these new alternative exchanges had on the JSE?
Yeah, so I have a very commercial mindset, so I always say positive impact. Positive because as you add in competition, you really sit upright to manage your value proposition, and competition is good and healthy for the marketplace overall. Unfortunately, the markets have been tough markets. The period that we've got the space of competition coming to South Africa have also actually barred this COVID period, have been markets that were contracting. So the JSE has fared fairly strong against local competition in that our market share is still quite sizable at the JSE, about 99 and over 99% of the market share is still at the JSE. We have seen some of dual listings happen between our market and the local competitors as well. But really, I think it's good for the market in that you can really try and respond in better price, better offering. Really working on what that does for the South African market as a whole. What has really actually been more concerning is the fragmentation of global markets. As you know, South Africa has always had a mix of local and foreign participants. And for me, regulation and fragmentation of markets on a global arena is probably more concerning than just, local competition. And that is something that we concern ourselves, and we look at the opportunities. It also creates opportunities. Many of our counters are dual listed. So trading in South Africa, trading in London, or trading in South Africa and trading in one of the European exchanges or in the US exchanges. It also gives you the ability, even though you might split your market, to grow the market share because you're tapping a wider base of clients. Yeah. And that was evident in just the activity we've seen in some of our dual listed. So it's quite a balance on breadth. As I mentioned, the tough markets we've fared okay, and we've tried to work on our market quality and really trying to get good caliber of market concentration in our market. And we'll have to just keep adjusting, and globally, the level of fragmentation has gone far beyond just other exchanges. And you also have to worry about, are there additional costs to navigate such complex markets that come in as unintended consequences, as has been evidenced in the European markets and the US markets. So like I say, it's a balancing act, and you take the good of making your product or your offering, your client service a lot better. And then you really have to, pay attention for what the consequences could be for the South African marketplace. We're really trying to have a marketplace that is healthy, where you have things such as addressable liquidity. That's an appeal factor to a market, good caliber of listings. And I think that is really on a global arena how we view competition.
Yeah, competition is always a good thing in markets, keeping incumbents on their toes and improving their offering to the market at the same time. And what we've also seen is the rise in the US of the so-called Robin Hood traders. We know retail traders in China are a big part of that market. What activity are you seeing from the do-it-yourself trader here in South Africa? We've got a plethora of new banking apps enable people to trade shares from their mobile phones. You've got easy equities. You've got all of these offerings at the moment. What impact are you seeing that have on the exchange?
Yeah, I think that we have a very slow penetration of direct investment access in our market, and that has always been a focus and an area of growth. Social inclusivity, how do you become more astute about investing, and how do we shift some of that management from institutional to the hands of the end investor? As you said, globally and even in South Africa, through COVID, you definitely saw an increase in, working with our counterparts, just hearing of how now more end investors have become interested in markets and have actually opened up accounts and started trading. So about 5 years ago, or maybe just a little bit longer, in partnership with government, the tax-free savings account was brought in, and that was again an intent to try and get more investment to the end investor. But in COVID, you really saw that come to the fore. So there were a couple of examples locally. There was the MSCI China ETF that listed, and speaking to the issuers of that product, said the growth that they expected to reach in 3 years, they actually reached it in 3 months. So, it shows you the depth and the breadth of how phenomenal.
We bought some on Monday.
Oh, there you go. Well done. And even speaking to to some of the CISs, they had end investors, more money coming to market. People have seen opportunities. Now in the US, and you mentioned robot trader, we've seen a shift to client mix from what we've known it. And I've been in the market for a while now, and really in the past 5 years, you've seen really different types of traders. The most unassuming traders that you would get, more quants, more algos, more end investors. So the only concern around, like, if you look at things like robot traders activity, they definitely saw spikes and surges. They had price wars even before COVID, all of them cutting their brokerage rates to zero and really trying to get in more end investors. And you also saw growth in the options market in the US, but all of this speaks to more day types of traders, day traders, more direct investors. And it definitely has benefits. It fuels liquidity, it fuels activity, but it also has cyclicality that comes in. And we even saw that in some of our local counters listed in markets that have more robo-trader type clients, where the moves have been quite volatile. So there's good and bad to it. And I think the objective of this is, if you get a better, healthier breadth and mix of clients, and people are becoming more astute and becoming more aware and trying to save money, then the intent is right, and it's great. It's really good to see how that has turned the dial in South Africa.
Then lastly, Valdene, our time has absolutely flown by. What can we expect from the Johannesburg Stock Exchange in 2021 and beyond? How are you thinking that COVID has potentially changed the way that you do business permanently?
Yeah, so you rightly said you had intro saying we have a new CEO, and with that comes a lot of energy. And then, as I had mentioned, we in a time where you just kind of have to be bold and brave and be reactive and try new things. So I think for 2021, we're optimistic about a more resilient and a more creative landscape for the JSE. We have a plethora of things on the radar. You would have seen we also made an announcement last week where we have shown our intent to go into private markets, and that will support things like infrastructure and SME growth, and a different take for the JSE of 133-year-old history. There's lots of disruption coming in, but again, opportunity gives us the opportunity to go into a fintech space, and then also just embrace practical things like new ways of work, become first world and a bit more accommodating. We've actually managed to run the exchange successfully through COVID, notwithstanding lots of hiccups, but again, working with the marketplace, but largely successfully, for this COVID period. And it showed us that our people can work from home, and that this could be something we could adopt on a more permanent structure. So we are looking at more practical ways to really empower people to say, if you can practically work from home, how does it work for you? How does it look? So it's exciting stuff. I think we've got a lot to tackle, but we're very open to diverse and different changes.
It's not working from home, Valdene. It's living at work for some people. The way the
I
way
tell
it's
you,
meant that we roll out of bed and
the boundaries have been a problem, I have to say.
it's been a real pleasure sharing your insights into how COVID has altered the landscape in our capital markets, and I think resoundingly for the better in terms of to think out of the box, a lot of innovation, and I can see you need to get.
That is now living from work. That is living from home. I'm sorry about that, but
that is living from home right there. Valdene Reddy, Capital Markets Director at the JSE, thank you so much for sharing how you've managed to navigate the pandemic storm here on Business Talk and Business Tech.
Thanks, Michael. Bye-bye.